Hey everyone, welcome in to another daily editorial here on the KE Report. We're getting an update from Minera Alamos. We're going to be talking mostly about the 2024 outlook here in terms of operations down in Mexico, development, and I know all of you wondering about cash flow if the company is funded to continue to grow their production on a number of different mines. We're chatting with Doug Ramshaw, president of Minera Alamos. Minera Alamos is traded on the TSX Venture Exchange under the symbol MAI and on the OTCQX under the symbol MAIFF. Now, Doug, focused on 2024 here, talk to us about what some of your outlook is for production and if we can get into the cash flow that you are estimating mostly from that Santana project, that Santana mine, please.
Sure, absolutely. February, we came out with a plan to use the existing pad capacity at Santana. We initiated that plan late in April. I think blasting has just started at the Nicho Main pit there. So the plan we outlined was 25,000 ounces that we're going to get mined over a 12-month sequence. That's more than Santana has done in any 12-month sequence prior. And the importance there was while we're waiting on some permit amendments down at Santana, we didn't want to sit on our hands. We wanted to be proactive. We didn't think our shareholders should sit on their hands. They did in 2023. We appreciated their loyalty, but it was a tough year. It was a year designed around protecting the balance sheet. So, notwithstanding, this new plan will get us back to generating free cash and adding cash to the balance sheet. That protection of it allowed us to finish last year with, just under or right around 20 million in working capital and just over $13.5 million in cash. So they were tough decisions we made last year. They were right. I'd do them again. Once you spend cash, it's gone forever. So protecting a balance sheet is very important, and it sets us up to having the capital required to initiate this positive advancement in Santana operational performance, which is good from a generating cash perspective. It's also very important for when Cerro De Oro is ready to be built, because we've got the funding package lined up for Cerro De Oro, but you always want to have suitable working capital when starting up a mine like that. And that's where Santana not only generates its own cash, which would start probably in Q3 and then a 12-month sequence thereafter in terms of the cash coming from the mining that's commencing now. But also it's going to generate the very cash that you want to have on hand when you're starting up the much bigger Cerro De Oro. And some of the working capital requirements are met with just the payment terms you have with your mining contractor, but you certainly want a healthy buffer. And Santana is going to deliver and should deliver that healthy buffer, and we're doing that off obviously a pretty healthy cash position right now.
Well, Doug, let's dig into that just a little bit further for people following along, because it's kind of just a two-part sequence here with Santana, where your team has already started to optimize the existing leach pads to boost production, which is a big win for production output this year. And just that alone is enough for that working capital, that sustaining capital when you get Cerro de Oro going. But then you also have that permit you're waiting on where you can even expand it further and the leach pad. So maybe just to speak to both of that, what did the team do to expand production for this year? And then when that permit for Santana does come in, how do you even expand it further at Santana?
Yeah, and I mean the tough thing is that you never want to be, and we're not making excuses here. I mean the reality is there are times where things are out of your control. There are things you can do, and we're working on down in Mexico right now to kind of wrestle some of that control back so that we can pretty early on into this 12-month mining sequence we're talking about, look to expand that pad. There are ways of being able to kind of apply on a more piecemeal basis rather than the broad project permit amendment that will run in parallel with hopefully just receipt of that permit amendment. And so this 12 months wasn't like, oh, here's a 12-month plan and then what? I think you'll see this 12-month plan dovetail into normalized mine operations at Santana. So, but it was important to have that runway. It was important to have that outlook for our shareholders and to get back to generating cash. Santana has enviable operating costs. It's not just that you can build cheaply in Mexico. Your operating cost structure down there is very good. These are sub-1,000 ASIC type projects. So, when we've been producing gold at Santana, it has made meaningful money. Last year was a decision to curtail production to focus on activities like pre-stripping. So we pre-stripped the Nicho Main zone. We're just opening up now. So we weren't sitting on our hands, and we've made at least the mining sequencing much more efficient now on a go-forward basis. So these were tough decisions we made last year. I'm very happy with being able to put 2023 in the rearview mirror, and I think we presented what should be a very positive 2024 in comparison. That being said, we set the bar pretty low last year to be able to improve on that in 2024. I mean, world-class limbo championship low. But, the reality is I think there's lots to be looking forward to. And the company definitely wasn't sitting on its hands last year, including coming up with reimagining how we can efficiently use the existing pad space while waiting on the plans to expand that. So yeah, we wanted to create a realistic, certainly a rosier outlook for 2024, but one that we consider very realistic as well. And we were happy to present that to the market both in February and April with releases regarding that mine plan, but also obviously the outlook we presented in our financial statements this week.
Let's talk a little bit more about the financials then. You outlined, look, you ended the year a little under 14 million in cash. You also have a $25 million financing package that was signed in October. 5 million of that, I believe, has been already drawn. When you look at operations this year, getting back into a focus on producing a bit more, generating some cash flow, do you think you're going to have to go back to the market to fund any of the development and continued growth that you're planning this year?
For our existing assets, no. I mean, we've been clear that we're looking at other opportunities as well. But I mean, heck, we've been looking at other opportunities since 2018. And the only one we've ever done was Cerro De Oro, which was a remarkable acquisition for our shareholders. So no, the importance last year was to ensure that our plans this year could be self-funded. And I've had a lot of shareholders commend us. I mean, they've stuck with us, but one of the things they mentioned is our approach to fiscal responsibility. I wish our Canadian government had the same approach at times. And it's amazing how cognizant you are about dilution when you're big shareholders yourselves. And that's reflected on how good we are at spending our money, because it's not our money, it's our shareholders' money. And once you spend it, it's gone. And if you spend it unwisely, it's got to be replaced. And that replacement comes at a dilutive impact on your shareholders. And we are dead set against dilution. I mean, we've diluted to the tune of 30 to 35% over the last 5+ years with everything that we've been up to. I see companies dilute their shareholders that in one financing. I think it's that very approach to capital preservation with a very smart business model still that has engendered a tremendous amount of loyalty in our shareholder base. I've talked about that before with you and others. Now 2024 is about rewarding that loyalty, and I think we have a plan ahead of us that will definitely be able to achieve that.
Well, Doug, let's dive in a little bit more to the 2024 plan, but this time at Cerro De Oro, you've already started doing work. Like you said, you weren't sitting on your hands last year, and to Corey's point, you've drawn down some of that credit facility to start working on some of the pre-production and earlier stage parts of it. What has the team done on the ground at Cerro De Oro, and what is the plan for this year?
Yeah, I mean, the plan this year, there's additional met work. I mean, we got one last option payment due on it. We made $1 million payment last year. There's one remaining one of $1 million US due in August. We're looking at long lead item deposits required for stuff, really, as much as anything, because you want to minimize any delays. Like once we get permits at Cerro De Oro with the funding package in place, it's ready to go. Right. So that construction window is maybe about 6 months. There are things that you can do in advance, to ensure that 6 months is realistic with long lead item deposits. There's more met work we want to do this year. There's some additional land that we think offers some potential down there. Cerro De Oro is the future of the company, and yet you'd be amazed how many people still look at our initial $10 million build at Santana, and that's their primary focus. So we've really addressed that primary focus. And okay, there's more to look forward to at Santana this year. And in parallel with that, we will just keep doing everything that we need to do at Cerro De Oro. So it is ready to go. There's that permit news comes. There's not going to be that overhang in the market that is, okay, but how are they going to fund it now? Like, there hopefully will be a bit of a rubber band on the stock when we get positive permitting news at Cerro De Oro. And we believe Cerro De Oro will get its permits. It's a kind of mine that has got huge community support, local municipal support in the state government in Zacatecas. So, it's the very kind of mine that, you want for your stakeholders who are, yes, your shareholders of your company, but the people you can make positive changes to their lives at the local level as well as obviously government receipts from future income from it. So, everything about Cerro De Oro is lined up so that when that news comes through, we're ready to go. And then I think people are going to be able to start, and the analysts and funds are going to be able to start analyzing just how meaningful Cerro De Oro's cash flow is for the company. I mean, you have to remember there's a 28 million capex that includes 30% contingency. So call it a $25 million project, more than likely at most, in our mind. It's sustaining capital over the PEA case. We're obviously permitting a much bigger case right now, something that actually is more like 11 to 12 years at 85, 90,000 ounces a year. The PEA was 8 years of 60. But even if you take that PEA case, the sustaining capital over 8 years was only $14 million. It's really just phases of, we're going to start with 400,000 square meters of pad space, and then you'll just phase additional pad space thereafter. Not anything that requires permit amendments. We're permitting for the bigger case right from the outset. And so when you're looking at your operating cash flow and you're zeroing out on average $1.5 million to $2 million of sustaining capital, the vast amount of that operating cash flow is free cash generation. And our biggest challenge, and the biggest challenge on behalf of our shareholders, is when Cerro De Oro is built, efficiently being able to deploy the kinds of money that can spit off it. Remember, the PEA was done at $1,600 gold and had a sub 900 AISC life of mine. The cash generation of that project is cartoonish when it's up and running. And yes, our biggest challenge will be how do we efficiently deploy that capital back into the business model? Certainly a really nice problem to have. And we're looking forward to having that problem. And for a lot of our shareholders that have been loyal and patient, for them to look and go, see, that's why we stuck with Minera. And in the interim, this year, I think we'll have a lot of positive things as we wait for the Cerro De Oro permits to come through.
Yeah, it sounds like a lot of people waiting for those permits to come through and then waiting for that build to happen, generate some more cash flow. Not to dilute the story here, but I do want to discuss the recent acquisition of a copper project and also the comments in that most recent news release where you said that the company is looking to start a series of internal engineering studies looking for the best paths for development of a regional copper developer or producer focused on, again, low capital intensity projects. How does this fit into the big picture here for Minera Alamos? And any time frame on this? How quickly do you want to move forward with this copper strategy?
Yeah, I mean, so Minera was a company called Virgin Metals, and before its move into gold and the renaming, Virgin had this project called Los Verdes. It had a 2008 PFS done on it, and then a refreshed 2012 PEA done. It's no slouch. We don't talk about it. We don't get value for it. I mean, even back in 2012, on a high capex project, I think it was $90 million of capex. We're reimagining it as a smaller scale thing. But on a $90 million project using 250 copper and $14 moly, it spat out a 36% IRR. I mean, it's a nice little project. I don't think it belongs in Minera. Our goal is to have a separate kind of Minera copper entity that will be spun out potentially towards the end of this year, although I would say more realistically in the first half of 2025. And we're starting to look at the path for that right now. Now, whether the interest is corporately owned in that or distributed to shareholders or a combination of the two, we just feel that, especially with TSX.V copper production, which is kind of the cousin of heap leach gold, I mean, your reagent is sulfuric acid rather than cyanide, we can approach building a copper development company that won't take away from the gold side, but in fact enhance it through however we structure the ownership, that plays off this low capital intensity approach and build a meaningful regional copper developer and producer in that part of Sonora where there's lots of opportunities we see for further consolidation. But we're going to do it all at the subsidiary level, including any funding to be directly in at the subsidiary level. So our gold shareholders are not going to see that distraction of either capital from the balance sheet or management time or whatever, but it's a classic Minera way of trying to surface value for our shareholders from something we get no value for right now. So I'm excited about that. I think it just adds something to what to look forward to in 2024. And it was about a year in process with this. And the company we're merging two Mexican entities in there have rights to this other asset that, has been subject to ongoing litigation for a long time, but our reviews down there of the legal basis of this is that their rights should be enforceable, and Swaki would be a very good add-on to Los Verdes, which, as I said, in its own right is a very nice, modest copper project that can have very modest capital requirements to actually get up and running. I mean, we're thinking about building copper mines that are in the $20 to $40 million capex range, rather than everyone, I think, thinks, oh, you hear copper, they've got to be giant things, and they come with a giant $1 billion plus price tag on them. So I've got a slide in the deck which says something along the lines of copper capex doesn't have to start with a B, and that's kind of the mantra that we want to be singing on what hopefully is a separate, independent Minera Copper in due course.
All right. So following kind of that Minera Alamos model. Well, Doug, thank you for the update here. 2024, a lot happening with the company. I hope we answered a lot of the questions that investors have on especially cash flow, funding, and future development activities. If we missed anything, please, people, email us. We will get Doug to address those. And Doug, please keep us up to date as things progress at Santana and any permitting news at Cerro De Oro. Doug, thank you for your time today. We'll chat again soon.
Thanks, Corey. Thanks, Shad.